You are listening to chartingwealth.com for Tuesday, the 7th of August, 2018. Thank you for everyone who purchased our book over the weekend. If you don't have a copy, Charting Your Way to Wealth, you need to get one. We have lots of stuff going on this week. Of course, our daily market reviews at the end of the week, the weekly market review. We also got a special presentation we're going to be sending out to you in the next day. That is for everyone who has purchased the book. We've got two that are coming up. One is on Bitcoin and our Bitcoin chart and how to use it, how to read it. The other one is on the quarterly chart, republishing what we did recently on the quarterly chart, which those of you who know about the quarterly chart know how incredible that chart is, going back accurately over 20 years, getting you into and out of the market at good times for the ups and downs that we have seen. And again, I know how important it is for you folks to tune into that, and we're going to share that with everyone who has purchased the book. So if you haven't purchased the book, please go ahead, do so. We get your email when you do purchase it, and we will put you on that special list, Charting Your Way to Wealth. It is our book that explains all the methods we use here at Charting Wealth that you hear us talk about every day, what the Bollinger Bands are all about, what the price percent oscillator is, why we use it, the Heikin-Ashi candlesticks, how they work, the minor indicators, our major indicator, our two primary methods of getting into and out of the market, everything you need to know to understand what we do here at Charting Wealth. So let's jump into these markets, and something special to share with you at the end of the podcast regarding the relationship between the dollar index fund and gold. And it's an interesting relationship, and there's one word for it, and we'll tell you that when we explore it. And it'll also be interesting to you for those of you who don't really want to short gold while it's going down in your practice trades, but would like to look at something else that goes up when gold goes down. Okay, I probably just gave it away. Let's jump into the S&P 500. We see stocks up for the day, bonds up, gold down, SPY starting the week off, first day of the latest 5-day candle up, derivative oscillator gaining upward momentum, price percent oscillator heading up. We look at the 2-day chart. What do we see? Well, we see that the latest 2-day candle, the prior one wrapped up on Thursday, the latest one wrapped up today, bumped up quite nicely. It had been, basically the market had been sliding sideways and got off the week to a nice kicker start. We do see the derivative oscillator continuing to lose momentum, but the price percent oscillator, our main oscillator, is heading up. What's going on that 4-hour chart? Well, of course, we told you to watch the markets for a jumping in spot, which of course you had. Market rocketed up in the morning and further up in the afternoon on our Heikin-Ashi candlesticks, moving higher and higher. Nice to see. Of course, we had the opportunity for jumping in a play with both the 2-day and the weekly moving up in the same direction. Just keep our eye on the price and see how long that goes. Like we said, S&P 500 up, it was up 0.37%. The Qs, NASDAQ 100 up 0.59%. Started the week off after a doji in the prior week, and really again a sideways slide, popped up rather nicely, pushing through first day again of the latest 5-day candle, derivative oscillator gaining momentum, price percent oscillator heading up, Heikin-Ashi candlestick pushing through the 2-day trend line, that down 2-day trend line. So we go from the weekly to the 2-day. What do we see there? Well, not crossed over yet, so don't have the opportunity to jump into a trade. Derivative oscillator gaining downward momentum. That's from those two prior strong down candles and the doji that ended it. But again, not enough energy yet to pull the 2-day over into an up move. What do we see on the 4-hour chart? Continuing to rocket up since it crossed over, going up in the morning on Friday, the 3rd of August, pushing through that 2-day trend line, and ended the day pushing through the weekly trend line, heading up. So keep our eye on things. Don't have a trade at this point because of the divergence between the weekly and the 2-day. Once that 2-day rotates back over, going up, if indeed it does, If and when that happens, then we would start looking for an entry point into a Q's trade. Not before then. And again, those rules explained in our book and in training videos. You can find things at chartingwealth.com. And again, if you're not already signed up for and aren't already receiving our daily market review, you can do that for free at chartingwealth.com. Sign up for our newsletter. Entitles you to so many wonderful things that we put out. Plus, you also get the links to our daily market worksheet, weekly market worksheet, and trade worksheet for free. PDFs you can download, print out, and use to just supercharge your training. Okay, TLT, 20-year bonds. Looks like they've started the week off a little up on our Heiken Ashi candlesticks. And again, what's going on though with our indicators, which are what we really truly go by, looks like the price percent oscillator is trying to move over, derivative oscillator headed down. And again, price percent oscillator trying to move over, going down. And again, folks, you say, well, wait a minute, what do you actually use? Indicators or Heiken Ashi candlesticks? We use everything in the charts all the time. Our main primary indicator is the price percent oscillator, blue line crossing over red, either up or down. Then we also look at what's going on with our derivative oscillator and our candlestick. So we use everything together and our experience. That's why you got to practice every day. So it looks like the weekly on TLT is trying to cross over, going down. We look at the 2-day chart. What do we see? Well, it's actually trying to level out and not continue going down. Again, up for the day, 0.06%. Not a lot. Derivative oscillator losing downward momentum. Price percent oscillator still heading down. And again, that's on this latest drawn 2-day candle, which is, of course, a green, almost a doji. Means lots of indecision tending up. What do we see on the 4-hour chart? We see that 4-hour chart booming up in the morning and pulling back some in the afternoon since it crossed over, going up back on in the morning on Friday the 3rd, continuing to move up. So we will just continue to keep an eye on things. Remember, the weekly is in a confirmed up move, the 2-day in a confirmed down move still. So again, we don't have a play and a trade on TLT until that weekly crosses over going down, and it can't do that until the end of the week. So we go from TLT, waiting to see how that's going to shake out, to gold. Now, what did I tell you about gold? Something to share with you. We start looking at the price of gold. What's the real driver on the price of gold? A lot of things are, but one thing that we find over and over, as I put in this symbol now, check out what gold's doing. Where gold started to top out, level out, and then start dropping. Okay, that was around February and March into April of this year, and then started dropping off the map then. If we go from gold to UUP, which is the dollar index fund, what do we see there? Why, lo and behold, it's almost an inverse of gold. We see where the dollar hit a bottom February, March, and April, and then started shooting up. Isn't that interesting? As gold goes down, UUP, the dollar goes up. As the dollar goes up, gold goes down. Isn't that an interesting inverse correlation? Something for you to potentially pay attention to if you're interested in following gold and seeing what's really going on. I hear a lot of market analysts talk about that, but people don't seem to always pay a whole lot of attention to that. Something for you to look at. Now, let's talk about what's going on in gold. Well, we see as we follow gold, we've started the week off moving down quite strongly again. Again, as we've talked, gold really started moving down in earnest, I guess, well, really on that week ending the 27th of April. And for only 3 weeks since then, it has been strongly down, keeps trundling down to $14.48 or so. Now, as we look, where has gold hit its lowest? Well, of course, we actually have a purple line there for where gold hit its very lowest, and that was around $98. Can it go lower than that? Of course it can. It did back in 2010, and so gold can really continue to launch down and down, but once the dollar starts weakening, you can expect gold to start moving up. So keep an eye, if you're really interested in gold, keep an eye on that dollar index along with gold. And again, it can give you some forerunning if you really follow the index and pay attention to what's going on in the dollar. It might give you a good idea as to when it's turning around, and you can look to jump into gold unless you're shorting it now or you're playing UUP. Again, on your practice trades. We're not a stock calling service. We're an education firm, and we want you to learn with us and practice. But practice this. When the dollar does finally start to crash, you're going to see gold soar. When's that going to happen? We don't know. We're trend followers, though, and we'll follow that trend when it happens. So again, weekly down, derivative oscillator, price percent oscillator on gold. We go from the weekly to the 2-day. We see that the 2-day chart has hiked over going down. The price percent oscillators was losing downward momentum, started to gain it again. Derivative oscillator heading down. So we'll continue to keep an eye on that. And again, price movement well below the 2-day and the weekly. And we go to the 4-hour chart. What do we see? Well, it crossed over back on the 2nd. That was Thursday. And again, has been heading sideways and down, primarily down in the morning and in the afternoon on Monday. Price percent oscillator heading down, derivative oscillator. Looks like it's flat or gaining some downward momentum. So again, we had that crossover and a jumping in point at the end of last week. And again, done very well for you if you jumped in and wanted to ride down some more on gold in an inverse play. So again, the tip today, keep your eye on UUP and just remember that inverse correlation between the dollar and gold. That's where we are, folks, as we end the day on Monday, go into Tuesday. Hope that you've started the week off with a bang and that you have a great week. If you have questions, problems, concerns, you can always write to us, chartingwealth1@gmail.com. God bless, my friends. Buy our book. Help us out. Take care. From the whole team here at Charting Wealth World Headquarters.